Just to start off, though, where Dom said up there, in terms of this, race to zero on retail brokerage commissions, does it have an effect on the larger institutions, or just reflective of how essentially it's tougher to charge for the stuff you used to charge for?
Well, as a colleague at my firm said, there's no way to sugarcoat the impact of zero commissions on the e-brokers. Having said that, when you look at the banking space, it's not material, and it's not the way banks are doing business. That's kind of a 20th century business model. The 21st century business model for all of the large banks is to have a relationship, have a financial plan, have products, and charge fees. So it's not a material impact on the banks, but it does highlight the declining revenue growth in the financial industry as a whole. You're reducing the frictional costs of finance, and that's a good thing for consumers. But what it means for the banking industry, it means revenues this decade should grow the slowest in 80 years. So if you're having slower revenue growth, what do you need to do? You need to control expenses, and the way you do that is with technology. So we're about to enter the golden age of banking and technology. You're going to see technology applied at banks like you've never seen it done before. Oh, and by the way, banks have no choice. Banks are spending $150 billion a year on technology. So they better get...
So they're already in there trying to transform them.
But they better get the results. The last 25 years, it has not really worked.
Yeah.
Scale has not been better. Scale now is better at the biggest banks. You're now seeing that Goliath is winning. And when you look ahead, I mean, right now you see the biggest decline in branches in history, the biggest decline in employees in history. Looking ahead this decade, we think there will be a reduction of 200,000 jobs in the banking industry. And the reason is, when you look at it, we worked 6 months on this project. We dealt with 9 senior tech analysts at Wells Fargo Securities in the research department. So we went to the brain trust, and we dug deep. And you said, how much are you going to save in technology, in data centers, in telecom, and software? You know where the biggest savings are due to tech?
Yeah.
Non-tech, employees. Employee costs are half of bank expenses. So the main lever that banks have is to control costs, and you can do that with technology.
Is it only a cost thing, though? Because if you look at the valuations of a PayPal, Square, Stripe, talk about all the kind of non-bank lending that goes on, it seems like the market's suggesting that they've kind of been sidelined, the big banks. Is that true? And how can tech fix that?
Well, wait a minute. I mean, the banks are not sidelined. Take a look at Bank America. Bank America's retention of their preferred customers is 99%. Retention of customers in the banking industry is at the lowest level since at least the early part of last decade. What you're seeing now, and here's a concept, and this is different than those online brokers that you're talking about, like the idea of, I'm going to go to this financial institution because they charge me the lowest rate on one trade.
Yeah.
No, we're talking about lifetime customers for life. And the way the largest banks can do that is because you get them young, you have digital banking relationships, you have branches, you have advice, and you're seeing that in the numbers today. So you might not see it in the top line in absolute terms, but you're seeing it because you retain those customers. And that's why, even without much revenue growth, you still can see returns go higher due to improving efficiency that's enabled by technology. This is fantastic. I mean, it's not easy. This is the biggest capital for labor swap in the history of U.S. banking.
Yeah.
So all those, you've been around.
Yeah.
Remember a couple decades ago, late 90s,
Yep.
the tech bubble, and that was going to transform banking? It didn't in the ways that everybody expected. Efficiency did not improve because of bureaucracy, but now technology is helping to serve customers and banks run their operations.
From an investor's perspective, what's the takeaway? Is it simply that, look, I see Fiserv, for example, stock go up almost every day, and that's a seller of technology services to financial institutions. But in terms of the banks themselves, it's just say, take comfort in the fact that margins are going to get better and they're going to forge digital relationships with customers. How does it work for an investor?
Well, this is the time to buy bank stocks. Century to date, bank stocks have underperformed by 70 percentage points. And by the way, they've underperformed more this decade than last decade during the financial crisis. But now, looking ahead, banks should have record efficiency, the best pre-tax margin in 50 years, the highest returns since pre-crisis, and that's driven by efficiency. Meanwhile, banks are trading as if it's like going to be a recession tomorrow. So if there's a recession, you're pretty much pricing that in. Meanwhile, you have this powerful structural change taking place with technology in banks. So if you're a bank investor, you also have to at least be a tech investor. If you're a bank analyst, you also have to be a tech analyst, which I'm calling myself now a tech
You're
analyst.
Officially anointing yourself a tech analyst.
There you go.
But I wouldn't become like a steel analyst, I don't think, or I'm not sure about a bank analyst. Really, you should switch.
Well, I'm still a bank analyst, and by the way, since you're here, Joe, I'm going to induct myself into the world of technology analysts. Are you ready for my induction ceremony?
Actually, that tie is no great loss. Yeah, go ahead.
So we're going to go ahead and.
Will you help him do that?
I'm now leaving the world.
Don't cut the microphone like wires.
Okay, we won't do that. But here we go. This is the end of my days as just a bank analyst. This is not as easy as it looks. But we will get this done.
Mike, you got to help.
Here we go, and we got it. So this is goodbye to solely bank analyst. I am now a part-time tech analyst. I am joining the ranks of the Silicon Valley because if you are a banker, you must be at least a part-time technology manager.
Those shoes are too good. You got to get some.
Okay, well, I'll work
the tie out because you didn't want it.
Yeah, I asked my wife, what's the ugliest tie in my closet? She picked this.
She did.
Yeah.